The credit card trap. How banks secretly make billions. Right now, somewhere in the United States, someone is swiping a credit card. It could be a student buying coffee on the way to class. It could be a parent paying for groceries or someone ordering something online they don't actually need. For most people, this swipe feels completely normal, convenient, fast, harmless. But what most people don't realize is that every single swipe feeds one of the most profitable financial systems ever created. A system designed not just to help people spend money, but to quietly keep millions of people in debt. And the most dangerous part? Most people never realize they are inside this system until it's already too late. This is the hidden story of the credit card industry and how banks make billions from everyday people. The story begins decades ago. Credit cards were originally introduced as a tool of convenience. Instead of carrying cash everywhere, people could borrow money for short periods of time and pay it back later. At first, the system seemed simple and fair. You spend money today and you pay it back at the end of the month. But banks quickly realized something powerful. If customers didn't pay their balance in full, interest could be charged. And that interest could turn a small purchase into a long-term profit. Today, the average credit card interest rate in the United States is often about 20%, which means that a purchase of a few $100s can slowly grow into a much larger amount over time. And once someone starts carrying a balance month after month, the system begins to work exactly the way banks designed it. Not to eliminate it, but to maintain it. But the credit card system isn't just about interest rates. It's also about psychology. Think about the difference between paying with cash and paying with a credit card. When you hand over physical money, you immediately feel the loss. You see the money leaving your wallet. Your brain registers the cost. But with a credit card, that feeling disappears. You swipe the card and the purchase feels almost invisible. There's no immediate consequence, no immediate pain. And that small psychological trick changes how people behave. Studies have shown that people spend significantly more money when using credit cards compared to cash because the brain simply doesn't process the payment the same way. And when people spend more, banks earn more. But interest and psychology are only part of the story. The real engine of profit comes from something else entirely. Fees, late payment fees, over limit fees, penalty interest rates. Every year, millions of Americans miss at least one credit card payment. Sometimes by accident, sometimes because money is tight. And when that happens, the system activates. Late fees are added. Interest rates increase. Debt grows faster. For banks, these small penalties create massive profits. Because once someone falls behind, catching up becomes harder and harder. Another powerful part of the system is rewards. Cashback, travel points, luxury benefits. At first glance, these rewards look amazing. Free flights, hotel upgrades, cashback on purchases. But here's the part most people never stop to think about. Credit card rewards are not free. They are funded by the system itself. Every swipe generates a small transaction fee that businesses must pay. And those fees help finance the rewards programs that attract more customers. Which means the more people use their credit cards, the more profitable the system becomes. Today, the credit card industry generates hundreds of billions of dollars every year. Not from wealthy people who pay their balance in full, but from everyday users who slowly accumulate debt. For banks, the most profitable customers are not the ones who avoid interest. They are the ones who carry balances month after month, year after year, because long-term debt means long term profit. But this doesn't mean credit cards are automatically bad. In fact, when used carefully, they can be powerful financial tools. They help build credit history. They provide fraud protection. They can even offer useful rewards. The problem isn't the card itself. The problem is the system behind it. A system designed to quietly encourage more spending, more borrowing, and more long term debt. So, how do people escape the credit card trap? The answer is surprisingly simple. First, always treat a credit card like cash. If you cannot afford to pay for something today, don't put it on the card. Second, always pay the balance in full whenever possible. Interest is the real engine of the system. Avoid it, and you remove the bank's biggest advantage. And third, remember that convenience can easily turn into dependence. Because the easiest financial mistakes are often the ones that feel harmless. Credit cards are one of the most powerful financial tools ever created. But they are also part of a system designed to profit from human behavior. Understanding that system is the first step toward using credit cards wisely instead of becoming trapped by them. Because the real power isn't in the card, it's in the person holding it. And once you understand how the system works, you can finally stop playing the game the way banks expect you to.